Hello everyone, my name is Sagive Greenspan, General Manager of Finastra Israel and General Manager of Payments globally in Finastra. I'm excited to be here. Today we're going to talk about fintechs on the day after COVID. But maybe before we start, for those of us who doesn't know Finastra, we are the third largest fintech in the world. Roughly 11,000 employees, $2 billion of yearly revenue, operating in many countries, roughly 8,000 customers. All of them are financial institutes. You can see some of our statistics on the screen. More than 50% of the total syndicated loan, 175 million retail banking, 27% of all US financial institutes are ours, etc., etc. Here in Israel, we are running the payment line of business, and the payment line of business is one of four Finastra line of business. You can see more than 300 customers running 23 trillion US dollars in payments a day, 25% of the US Fed wires, 40% of the UK faster payment, etc., etc. So let's talk about fintech in the day after COVID was introduced to us. But let's start with how was 2019. 2019 was a fairly good year for a financial services industry. We enjoyed a fairly strong growth, roughly 5 to 6% globally. In payments, it was even 12%. Emerging markets was sometimes 18 to 20%, depends on the geography, but overall, strong growth. We had all-time high investment in fintechs. If you compare 2019 to 2010, 10 times more, from about 4.6 billion to about 42 billion. Challenger in digital banks were growing fast, and we were enjoying innovation almost throughout, even powered by the regulation, such as open banking, PSD2, etc. So overall positive. And then came COVID-19, which introduced to us a whole new reality. We saw a reduction in 40% in deals in the last quarter compared to the same quarter last year. Everyone started shoring up cash, 27% reduction in investment in fintechs, and the slowdown is supposed to be until probably a year from now, with recovery of 1 to 3 years after that. However, as always, not everything is rainy. With every rain, there are opportunities. COVID-19, we say, has brought the future forward. We believe that there are all kinds of things, such as digitalization, that were supposed to take few years, will now be accelerated and will take few months. As Klaus Schwab said not long ago, in the new world, it's not about the big fish who eats the small fish, it's the fast fish which eats the slow fish. And so let's talk about the opportunity. Where do we think the opportunity is? And I will categorize them into four. First of all, the acceleration of digital, the digitalization of payment, digitalization of banking, everything related to e-commerce. The lack of travel will accelerate the digitalization as well. People are even afraid to touch dirty money, so they prefer everything to be digital. The second thing is the increased focus on risk. So the technology will enable automation of KYC, automation of AI and machine learning, of evaluating risk of either consumers or companies, and the technology will accelerate that. Revenue compression will force innovation, whether it's going to be payments such as e-wallets or social payments, or even intelligent customer retention. The fight over customer retention will grow. And of course, streamlining of cost efficiency, reducing the TCO. All of these will increase adoption of cloud and focus on cybersecurity and fraud. Now, when we see all that, we see the need. However, we see that the banks are still struggling to accelerate innovation. We can see that 40% of the bank still believe that they have struggled to apply innovation quickly. 21% of the banks believe that their system are inhibitors in order to move faster and be flexible enough in order to apply innovation. So the banks have basically few ways of how they can move forward with innovation. One is to build their own, but that of course is costly, it's slow, and they need to invest everything that they need to do, they need to invest it themselves. They can do a buy, which is a combination of product and solution, but that's still something that requires integration, and of course they cannot monetize it themselves. The newer way, and sometimes the most attractive to some of the banks, especially the ones that are more innovative, is the collaboration. Take the bank as a platform, connect their core with APIs into the outside world, and add on top of it a marketplace, which is connecting the buyer and the seller. But the financial industry did not invent the platformification. There are many industries that are going through a similar process. Just as an example, let's take the hoteling industry. What you can see on the screen is the website of Starwood Hotels, whether it's mobile or on a laptop. And you can see what's under the hood. You can see that there are a lot of platforms. Some of it is enablement, some of it is partners, some of it is a broader ecosystem, some of it is even competition. But whether it's the booking itself or the event and meeting or the concierge services, all of it is enabling the hoteling platformification. So let's go back to the financial industry. Basically, there are few ways to do this platformification. One is the direct and third-party integration, so basically point-to-point bespoke integration. The second option is build your own platform, which is still fairly expensive, but you do have the access, but you cannot monetize. Or you can use a dedicated financial services platform that allows you to move faster, much cheaper, build on your own success, pay as you grow, and you have access and you can even monetize it. And for that, Finastra introduced about a year ago the open development platform for financial services called FusionFabric.cloud. And the FusionFabric.cloud it started from our core. We build on top of it the platform with open APIs into the cores and created a connected experience with intelligent data running between and the open ecosystem that allows the ecosystem to develop, whether it's a FinTech or the bank itself or any other partners, to develop on top of the core and introduce rapidly new services into the market. The FusionFabric.cloud has the Fusion Creator, is how you build the application, the Fusion Operate, which is how you operate the application, and the Store, which allows you to publish whatever you develop on a store for you to consume or for others to consume as well. It has all the cores, and it has everyone that can consume the applications and create whatever you want to create. Inside the platform itself, it has the feedback loop, the accretive feedback loop. The more consumers there are, create more producers. More producers create more data flowing within the system and into decision automation, which create more consumers. So, for summary, FusionFabric.cloud allows you to innovate faster, cheaper, and invest as you grow. We invite all the fintechs that want to connect to FusionFabric.cloud. Please join us to this journey of the platformification of the financial services industry. Thank you very much.